Hi everyone, I chose the topic for presentation is Ukraine war and inflation to limit global trade growth in 2023. WTO says high prices have cut into consumers' demand for imported goods. The war in Ukraine and high prices around the world are expected to slow down the growth of trade between countries this year. This will make it harder for global economy to recover from the pandemic. In other words, the war in Ukraine and inflation are making it more difficult for countries to buy and sell goods and services from each other. This is because the war has interrupted supply chain and made it more expensive to produce and transport goods. Inflation is also making people less able to afford to buy imported goods. The slower growth of global trade is a major concern for global economy. Trade is a key driver of economic growth and job creation. A slowdown in trade could lead to higher unemployment, slower economic growth. WTO said the volume of world merchandise trade is expected to expand 1.7% this year, following 2.7% growth in 2022. This year forecast falls well below the average annual growth rate of 2.6 since a trade slump after 2008 financial crisis. WTO expects global economic growth to slow to 2.4% in 2023 from 3.3% in 2022. Inflation is a big culprit of the sluggish trade growth. While food and energy prices have declined from sharply elevated levels from Russia's invasion of Ukraine in early 2022, they remain higher than the before the war, eroding people's income and demand for imported goods. The WTO expects global trade growth to pick up speed in 2024, 3.2%, but warns of substantial risk, including flare-ups in geopolitical tensions and food insecurity. In my opinion, the outlook for global trade in 2023 is upset with uncertainty due to persistently high inflation, tightening monetary policy, and fallout from war in Ukraine. However, there are some bright spots that could support trade flows this year. Inflationary pressures may be peaking even if the price growth remains stubbornly high. Moderating inflation would ease cost pressures on businesses and consumers, supporting trade activity. Oil and food prices have fallen from peak levels, though they remain elevated. If the trend continues, it would provide some relief. China's reopening after the strict zero COVID policies is a positive development as factories resume full production and consumers start spending again. China economy is expected to bounce back. This will stimulate demand for imported raw materials, components, and consumers products. However, the pace of China's recovery remains uncertain. Geopolitical tensions continue to disrupt energy and food supplies, but the global trading system has proven resilient, with countries adapting by diversifying suppliers when needed. Substitution and adjustments by importers could further mitigate trade headwinds. With many variables in play, I expect global trade growth will continue to be sluggish but positive in 2023, expanding 2 to 3%. Inflation should moderate and outright resistance will likely to avoided. Risks are still likely to be downsided. However, if inflation remains entrenched, supporting developing economies through this turbulent period will also be crucial for substantial world trade.